if we talk about ASEAN or ASEAN plus 5, RCEP, I think if we look at it from that perspective, and of course we'll come to China also, I want to understand if the audience, particularly the students here, are familiar with, for example, what kind of exports does Pakistan have? What are the key 3 or 4 big ticket items that Pakistan exports? And I think in most what you would notice is that we're talking more about commodities, right? So Pakistan in our value chain is not very advanced. Let's just put it that way, right? Especially from an export point of view, right? A lot of our industry that we've set up over the 50, 60 years that, industrialization has happened, has been one. We had the green revolution part, the 60s, in which a lot of agriculture-oriented industry was set up, right? And a lot of that was done to serve the domestic market, right? So in our journey as a country, most of the exports, most of the industry we have right now is one, inward-facing, and secondly, not competitive enough with the world, right? Now, the second question I have is, should we go to Indonesia? What is the product? Or if we go to Indonesia or Malaysia or any of the ASEAN countries, what are the 2 or 3 main products that we will buy from that country? So what you do notice there is that the products we buy are more high-value products, right? So we're selling commodities, and we're buying finished goods. Why can't we buy more intermediates or raw materials? We do buy raw materials because obviously we need to make stuff for the domestic market. But when do we buy enough intermediate goods from the international market? Trading structure, or the kind of trade that we are in, right? And when we go into negotiating trade deals, what are the kind of dynamics that we have to deal with, right? So we're selling products which are not high value, so per unit value of export is low, and we're buying products for which intermediates are there, but more intermediates are also, like palm oil, someone mentioned, are more geared for the domestic market. They're not geared for export. And then so we ultimately end up buying not a lot, but as far as the economy is concerned, for the consumption of the economy, we do end up buying finished goods from the international market, right? So coming to my point, the point is that you mentioned seafood going to China. The point is that it ultimately boils down to how our economy is structured. Are we geared for export, right? And what that comes to is competitiveness of the economy, right? And what is the competitiveness of the economy based on? The competitiveness of the economy is based on the cost of production, right? So how cheap is our product? The quality of our product. How acceptable is it in the destination country, right? And innovation, research. How innovative is the product? Are we able to compete in the international market based on what we are offering to the market? Obviously, like all of you mentioned, we are exporting commodities, so there's not much value addition happening. So a lot of it is based on whatever is coming out, we're just exporting it as it is, right? So we have to think about the underlying factors. Now, if we talk about exporting or doing more trade with the ASEAN plus 5 or ASEAN, the question arises, when we do that trade agreement, what are we going to base our trade on? Is it going to be, and of course, let's not forget services, right? So we have to keep all of these things in mind. And eventually, it all comes down to, and like I said, the quality, the cost, and the innovative factor in the product. So when a business person goes to the international market and they say, I want to sell you, a pencil that's made in Pakistan, he has to or she has to convince the buyer that the pencil that he or she might be selling would be lower cost and better product than what might be available from China or any other country, right? So that's one thing. I want to drill down one step further down, right? So when we talk about the cost of the product, we talk about quality of the product, we're talking about what kind of an institutional environment is Pakistan offering to the businesses who it intends to export, right? And believe it or not, we hear about it every year, the budget, right? how efficiently is the institutional framework in this in this country, Pakistan, run, right? So we're talking about a very high fiscal deficit. Okay? We're at times talking about an overvalued exchange rate, which is also anti-competitive, right? When the government spends too much and borrows too much, it's drawing out capital from the market, right? It's imposing more tax on the economy, which is an added cost on the cost of production. So believe it or not, this level affects that level, right? So getting into trade agreements is one thing, but fixing the house is completely another. And that is, if not the most important right now for Pakistan. We've entered into the free trade agreement with China, right? We've seen that the trade with China has increased to by $13 billion, whereas our exports to China have increased by $2 billion. China's kind of import from China has increased by $13 billion, which has increased the trade gap by about $11 billion. This is obviously, the answer is, in what I just mentioned, is that we're not competitive enough. We are exporting commodities, right? So obviously seafood is one area which I imagine is an area where we had some comparative advantage. So we were able to tap into that market. However, what we do need to do is that what's been intended is that we do get kind of more industry in Pakistan which can compete with Chinese products and cater to the demand in China. So hopefully we'll see more value-added goods go to China from Pakistan.